Hello guys, today we'll be talking about the type of trust that might suit you, and we have with us Dave and I'm Sarah.
Hi guys.
Hello.
How you going, Sarah?
Good, how are you?
Yeah, so we're talking about trusts and which one would suit your family and your business. So the two main ones.
Yeah, the two main ones that we usually look at, and that would be the discretionary trust and the unit trust.
Yep, so discretionary trust is, as the name says, it's at the discretion of the trustee. So any income or profit that's made during the year can be distributed to the beneficiaries,
Yeah.
which is a benefit probably more so once you start earning a bit more income in the business or for the family. So when the income is higher, that can then be split, say, between me and you, instead of myself just as a sole trader earning 200 grand. If we were both working in the business together, we would be able to split that.
Yeah.
So that's at the discretion. That could be 90 to Sarah because she works a lot harder than I do, 10% to me. It just depends, and that can be done on a yearly basis, which is good. A unit trust is similar.
Similar, but also the distribution is based off the units that you own. So if I have, if it's split 50-50, then the distribution will have to follow as is. So that would be, it's not quite the same in terms of the discretionary, because that can be just changed every year, the distribution percentage. So
it's basically fixed to what units you hold.
Yeah.
And that can be handy if you're holding property for the business, and that could be a separate entity from the trading business and then leased across, and that just helps in holding assets basically.
Yeah.
So discretionary trusts are also good because of the tax benefits that you get compared to companies. So if you're a smaller operator, instead of running a business through a company, you get the general 50% CGT discount, which is handy if you sell a capital asset out of a trust. In a company, you don't get that. You just have to flow through the franking credits and that. You get the yearly flexibility, which is good, and then you also, there's land tax benefits as well if you're holding multiple properties in different family trusts, which could be your family business. The unit trust is also handy in land tax and stamp duty, in that if I was holding units in a unit trust that held a property under 2 mil and transferred them to yourself, you would not have to pay stamp duty for that.
Yeah.
This is not considered a land-rich entity. So, on a property worth 1.4 million, the stamp duty saving would be roughly 63 grand. If you're transferring units from, say, mum and dad to son or daughter, that's a good way to structure, and that could be really beneficial to your family business. So they're the two trusts that we mainly deal with, and we do recommend them a lot because they do help minimise your tax.
Yeah, but I guess at the end of the day, it's really about what you want for your family trust and for your own assets and that. So yeah, feel free to give us a call if you ever need some advice on that, and we'll be more than happy to help.
Great.
Thank you for joining us.
Thanks, Sarah.
Thank you, Dave.
Bye.